Hello everyone, welcome back to the Token Minds training series. In this session, we are going to explore how blockchain is transforming trade finance by making letters of credit and bank guarantees faster, more secure, and more trustworthy, especially in cross-border transactions where delays and disputes are common. Today's focus is on how digital workflows replace slow, paper based processes instead of documents moving between banks, exporters, insurers, and customs offices by courier. Blockchain enables all parties to work from the same digital record in real time. This shift is what makes it possible to reduce processing from weeks to hours while also cutting fraud and operational errors. Before blockchain, trade finance relied on sequential, manual steps, so documents were printed, signed, verified, shipped, and re-verified across multiple institutions. This created three major problems: long processing times, high risk of document fraud or loss, and high operational costs due to manual reconciliation and dispute handling. So this slide introduces how blockchain replaces paper workflows with cryptographic processes. The first step is digital issuance, where a letter of credit or bank guarantee is created electronically, signed with secure digital keys and recorded on a shared ledger. This immediately removes the need for physical documents. The second step is distributed validation. Instead of one bank checking compliance at a time, smart contracts run validation rules in parallel across the network. This means sanctions checks, credit limits, and document completeness are verified simultaneously rather than sequentially. The third step is cryptographic approval. Every approval is tied to a digital identity and verified through secure signatures, making its decision provable and eliminating disputes about who authorized what. The fourth step is automated enforcement. Once terms are agreed, smart contract logic enforces conditions exactly as written, such as expiry dates, claim conditions, and document requirements. The final step is programmable settlement. When conditions are met, payment is triggered automatically through stablecoins or accessing banking rails like SWIFT or RTGS, with proof stored on chain. This turns settlement from a manual process into an automatic one. So this slide breaks the solution into a repeatable technical workflow. Step 1 is digital instrument creation, where the LC or guarantee is issued using secure PKI signatures, hashed for integrity and recorded on platforms such as Hyperledger Fabric, RT Corda, or Quorum to ensure tamper-evident records. Step 2 is distributed validation, where smart contract logic written in chain code, core tabs, or Solidity runs compliance rules. These rules are confirmed by consensus mechanisms like PBFT, IBFT, or RAFT, so approvals happen in minutes instead of days. Step 3 is cryptographic authorization, where digital signatures are verified through identity and certificate authorities. This guarantees non-repudiation and removes forgery risk. Step 4 is automated enforcement, where contract logic checks claims, expiry condition, and document completeness deterministically. This eliminates ambiguity about what was agreed. And step 5 is a programmable settlement, where payments are triggered automatically through stablecoins or traditional rails, secured by API layers such as APG with every action recorded on chain. This slide shows exactly how time is reduced. So the first step is removing sequential handoffs. Instead of waiting for one bank to finish before the next begins, validation happens in parallel across the network. For letter of credit, creation moves from days to minutes, document checking from days to seconds, and payment release from 1 or 2 days to just minutes. For bank guarantees, issuance drops from around 30 days to same-day processing. Amendments no longer require restarting the entire process, they update instantly. Claims that once took a week to verify can now be processed in minutes. The key reason for this speed is that verification and approval are automated, and network updates propagate instantly to all parties. This slide explains how blockchain replaces trust in paper with trust in cryptography. The first layer is a single shared ledger that all authorized banks use, so there's no confusion about which version of the document is valid. The second layer is timestamp and signed actions, which means every change is permanently recorded and cannot be altered later. The third layer is smart contract rule enforcement, which automatically blocks fake documents, duplicate claims, and unauthorized amendments. For bank guarantees, fraud guarantees are detected instantly because authenticity is verified cryptographically. So false claims are rejected by rule engines. Insider fraud becomes much harder because it would require multiple parties to collude or sign malicious actions. This slide focuses on how trust is created through transparency. The first step is ensuring that all banks operate on a single shared state, so everyone sees the same information at the same time. The second step is making every approval and update timestamped and signed, creating a permanent record of who did what and when. The third step is automatic rule enforcement, where business logic is executed by code rather than interpretation. The fourth step is building an immutable audit trail, which regulators and auditors can access at any time to verify compliance. So, for letters of credit, this removes disputes about when the LC was issued, who approved it, and which version is valid. For bank guarantees, beneficiaries gain confidence that the guarantee is real, the terms cannot change, and payment will occur if conditions are met. So in Australia, the Legal platform digitized bank guarantees, reducing processing time from about 30 days to 1 day. Tenants, landlords, and banks now issue and prove guarantees in a single digital workflow. For letter of credit, platforms like Contour, built by global banks such as HSBC, NG, and BNP Paribas, replace current documents with shared digital records. So buyers, sellers, and banks collaborate in real time instead of waiting for paper to move across border. Blockchain in trade finance is moving from innovation to infrastructure. By 2025, more than a dozen major banks are expected to run blockchain-based LC platforms. The next phase expands into bills of lading, insurance, warehouse receipts, and supply chain finance. In the long term, most paper-based trade instruments are likely to become programmable digital assets. So token mines support banks and fintech platforms modernizing trade finance with blockchain-based layers of credit and guarantees. We help design the full solution architecture, build smart contract logic for trade workflows, integrate with legacy BIM systems, and deliver measurable impact in faster processing, lower fraud risk, and higher transparency through complete audit trails. So thank you for watching. If you're ready to modernize layers of credit and bank guarantees with blockchain-powered workflows that deliver real speed, security, and trust, reach out to Token Minds. We'd love to help you bring the next generation of trade finance to life.